you hear what happened with mortgage rates? I'm going to take you through some recent news that impacts real estate and mortgage rates, go over the relationship between new construction and housing inventory, and then touch on current mortgage rates. And at the end, I'm going to give you a quick update on the fire damaged house that we closed on Wednesday. There's a lot to go over. I hope it's helpful for you. I'm Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. It's November 3rd. First, let's talk about some key Connecticut market stats. Active on the market today, 4,592 homes. That's up 39 from last week, so pretty stable. 254 new listings over the last 24 hours. That is lower than what we typically see, more like around 300 recently. So we had just under 3,200 closings in October. That number is going to change a little bit because we're still a few more closings being documented in the system, but it's right around where I expected. I actually predicted about 3,000, so it's a little bit light. Based on October sales, we have 1.4 months of inventory on the shelf. I expect that months of inventory number to creep up a little bit because we're going to see fewer and fewer closings over the next couple of months as the real estate market slows down as it normally does in the winter. Some key dates here. The non-farm payroll came out today and it missed forecast. This report has significantly exceeded forecast over the last few months, so this is a change. And the last 2 months' numbers were revised down by a total of 101,000 jobs. So there may be some weakness showing up in the job market here. Mortgage rates have eased back down to the mid 7% range with 7.5 this morning. Should future job reports continue to show weakness, mortgage rates may be able to sustain this new level and maybe even go down a little bit. We have the October CPI and PPI, which are inflation reports, coming out in just over a week. When those come out, you should have a better idea of what inflation's doing. What's your experience right now? Is inflation still raging, or do you think we've turned a corner on that? And these are U.S. building permits and U.S. total housing inventory. I want to show you how these two charts tell parts of the same exact story. Looking at building permits, this is somewhere around here is about the average. It's around maybe 1,300, or excuse me, 1.3 million. And permits, I'm using that as an estimate of new construction here. So anytime the blue line is above the red, you're building more than the average number of houses. Anytime it's below, you're building less than the average number of houses. And here you can see that the blue line, it was above the red line for an extended period of time, up until maybe 2007, 2008. So this was all more houses than the average. And then there was a long period of time up until about 2018 down here where there was fewer. So this is a big minus here. And looking at those same time periods up here, if you go from somewhere in the 90s, somewhere around here, up, you see a big run up until maybe 2008. And this is a big run up here. And then coming down to 2018, there's a big drop off. So while new construction is not the only driver of inventory, I hope you can see it has an impact. Another impact is millennial buyers are in the market at the same time that boomers are still living in their homes. The two biggest generations are putting a lot of pressure on the housing market with an already limited inventory. This is one of the reasons I say the real estate market isn't going to crash anytime soon. All right, so are you team real estate crash or are you team real estate success? Let me know. The primary mortgage market survey, mortgage rates have eased after running up for several weeks. This is the second week down back under 8%. The unanimous decision by the Fed to hold rates unchanged had a positive impact on markets in general. Yes, I was wrong when I said that they were going to raise rates. That's okay. I'll be wrong again. I'm happy I was wrong. Although the Fed wouldn't comment on what they plan to do in December, they were pretty clear that there's no discussion right now of rate reductions. There is speculation that rates will be held constant going into the next year, into 2024. And there's also speculation that a recession will hit by mid-2024, and that may be when we see rates start to come down. Check this out for yourself. Mortgage rates track closely to the 10-year Treasury yield. The 10-year Treasury yield as of today, as of this recording, is 4.5%. Historically, mortgage rates are 1.7% higher than that yield. So mortgage rates should be about 6.2, which is the 4.5 Treasury yield plus the 1.7. That extra difference between the 6.2 that it should be and where we are right now is the risk that the market is putting into mortgage rates. I stole this from somewhere. You date the rate and you marry the house. Mortgage rates are going to change. I really do think that we're going to see mortgage rates continue to ease over time. They might pop back up, but they will go down over time. And when they do go down, there's always the opportunity to refinance. With regard to recessions and all the speculation about a housing market crash, I'm just going to leave this slide here for you to take a look at. And we closed on the fire damaged house that we were buying on Wednesday. Super excited to get in there. Here's some pictures. I got a little narration in there. Take a look at what we're dealing with and some of the things we've already started working on. Made some progress here. You can see up into the upstairs. You can see those beams. Those things are shot. They're going to need to come out. And it continues down even though you can't really see it here. And my favorite thing of all, this is a gas-powered generator wired to a fuse box with a transfer switch, so that's good. Piped outside for exhaust. This is the emergency power system. That's all I have for today. I hope this was valuable to you. If you have any comments, questions, please throw them down below. Have a great day.